Welcome to another episode with Loans Elevated. My name is Broch TJ, top 1% loan officer nationwide.
And I'm TJ Heidenreich. Together we bring the latest news, strategies, and insights in the mortgage and real estate industry. Today we're talking about temporary buydowns. It's a huge buzzword in our industry, but no one knows actually what it really means. So we're going to dive into that today. Broch, what is a temporary buydown and why are they so awesome?
Yeah, so let's dive into it. Temporary buydown basically is a temporary rate improvement for a certain period of time. Basically, you've got a 1-0 buydown, which works like this. The first year, you save 1% on your mortgage rate. And then by year 2, your mortgage rate goes to whatever mortgage rate you lock in at the time. A 1-1 buydown is a 1% discount for year 1 and a 1% discount for year 2. Year 3, it goes to the regular rate. There's a 2-1 buydown, which just adds an additional 1% discount in year 1. So that is a 2% discount year 1, a 1% discount year 2, and then year 3, you go to the regular rate. So more of a graduation of monthly mortgage payment. Now, the most powerful one that we have really liked talking about lately is a 3-2-1 buydown, which, as you can imagine by now, year 1 is a 3% discount on the rate, year 2 is a 2% discount on the rate, year 3 is a 1% discount on the rate, year 4, your rate goes to the normal rate. This is extremely powerful. With the 3-2-1 buydown, you're getting your rates down by 3%. I mean, that is enormous savings. And with the game, I guess the economic conditions and the expectations, chances are in the first 1 or 2 years from today of you financing and then refinancing as the interest rates improve long-term, you're probably going to get out of the locked rate and you'll enjoy those savings and refinance before it gets real ugly, getting to the rate you actually locked at. So that's one huge perk. TJ, you have an example of how impactful this is on payments.
Yeah. So on this scenario, it's ran at a $360,000 loan amount. And the first interest rate, or the interest rate that you'd be locked at, is at 7%. But the first year, the rate is at 4%. And you're saving $676 per month. The total savings for that year is $8,116.
And that's on a $360,000 mortgage. That's a very small mortgage. And on that, you're saving nearly $700 a month year 1, which is insane.
Yeah. Year 2, your savings are $462 a month. And the total savings are $5,550. And year 3, your monthly savings are $236 a month, total savings of $2,840. So these are huge savings. But what's even more beneficial about this is what can happen if you refinance sooner. Dive into that.
Yeah. So one, it's awesome because that's dramatic savings. That's making homes affordable despite today's interest rates, empowering home buyers to go negotiate an amazing deal. Maybe the best negotiating time we've ever seen.
Right. It's important to note this cannot be paid for by the buyer.
Correct, yeah. It's got to be paid for by the seller or the lender, which the Lastic team at Cross Country does have an incentive where we're offering a 1-0 buydown for any home buyer, not on a jumbo loan, but any non-jumbo mortgage. We're offering a 1-0 buydown to any of our buyers as lender paid, which could supplement the seller paid portion as well. Correct. So the coolest thing about this in our minds, and we are jazzed about it, is you can negotiate. Right now, you can negotiate like crazy in the market. It's like nothing I've ever seen in my 15-year career. Buyers can go in and get easy. I shouldn't say easy, but we're seeing buyers get 10% discounts on houses by virtue of either a price drop and seller concessions or a combination of that. But the cool thing is, if you negotiate, let's just say you negotiate 4% in seller concessions. So they pay 4% of your purchase price towards your closing costs. You'll use about 4% of the seller concession to pay for a 3-2-1 buydown. That money, any portion that the seller funds, is refundable by virtue of a principal reduction when you pay off your loan. So think forward to what I was saying earlier in this episode, which is you'll likely refi in the first 1 to 2 years. That's our expectation. If you refi, you haven't actually taken advantage of all of the benefits because you're still going to have another year or 2 of savings that the seller has paid for. Well, those savings are kind of set aside in an account. So whatever portion you don't use by the time you pay off that mortgage that you bought the temporary buydown on, funded by the seller. Any seller-funded portion would be refunded by virtue of a principal reduction on your payoff of your mortgage. So the cool thing about that is you'll never lose this benefit. That's very different than negotiating concessions for a permanent rate buy down. Because if you refinance and you haven't saved enough money monthly to accumulate all the money you spent on the permanent buy down, that money's gone for good. So this is the equivalent, and in my view, better than even a price reduction. By a mile, it's better because you're saving money on the monthly payment, and there's no possibility of you losing any of the money you negotiated from the seller because you'll get a reduction in your payoff when you pay that loan off. So that's really it. I don't think I have anything else. They're awesome, powerful.
No, yeah, it's a super powerful product right now. It's important to note that you do have to qualify with the long-term rate. It can't be the discounted rate for the first 3 years.
Yep. But if you want more information on this, we would love to chat with you about it. A lot of people don't understand it. A lot of people don't know how to negotiate this going into a deal. And like I said, the Lastig team has an incentive that helps negotiate an easier deal for a 3-2-1. What we found is oftentimes you can get away with a 3-2-1 buy down for the homeowner or the borrower with only 3 points concessions, 3% concession from the seller. And the Lastig team contributes the remainder, which is powerful if you're in a negotiation standpoint. So we'd love to hear from any of you that are interested.
One additional thing. We are going to be posting on our Instagram a questionnaire. It's an anonymous questionnaire. If you guys have any questions about the market, mortgage related or real estate related, please type those in. We'll post it a couple times per week, and we'll have a show designated just for questions and a Q&A, honestly. And you can also IM us on Instagram at Loans Elevated, any questions you might have or any topics you want us to cover.
Yes. So please let us know anything you guys want to hear about on the show. We want to hear from you and get an understanding of what content is most valuable that we can dish out. So please email us, DM us, whatever it is. Get us the information so we can get you the info you want.
Thanks. Thank you for tuning in. For more industry insights, follow us on all platforms at Loans Elevated.
And to get in touch with our team, call or text 801-713-4000 or visit loanselevated.com.